The Brent has dropped 31% since May, and the WTI has dropped 27%. The OPEC is meeting this week, but we have turned to Léon Cornelissen of Robeco to understand the impact on general economy. Léon, good morning.
Good morning.
Now, this oil drop will affect some countries positively, some countries negatively. Who is really going to suffer?
Well, there are some countries which really need a high oil price for their government finances. As Iran, also Venezuela, Nigeria, Libya, Russia. So these countries will take a hit if prices stay at current levels.
Some countries are less hurt, though.
No, there's you could say for the world economy in general, the drop in the oil price is a boon. Especially consumers in developed markets will profit, but also countries like China and India who are dependent on oil for imports.
But even amongst the exporters, countries like perhaps Oman or Kuwait or even Saudi Arabia won't suffer that much because...
No, if they could easily live with lower prices for some time to come, that's correct. So they are much less dependent on a high oil price than the other ones.
This oil price has an impact on high yield. Can you explain what the situation is there?
Well, an interesting development is that in the US high yield market, the segment of the energy sector has risen markedly. So in the US you have now 15% in the high yield market is dominated by energy companies, among which some large shale companies. Well, with low prices, some of these companies could run into trouble. So you have to be selective by investing in the already a bit optimistic high yield market, especially because of your exposure to shale.
Those companies are very highly leveraged, aren't they?
Yes, that's why they are high yield. Yeah. So
yes, okay, but
not a lot need to happen in the bad direction, or some companies will fail.
Do you expect more defaults than is anticipated?
If prices stabilize at these levels, it's reasonable to expect some defaults, some increase in defaults. And currently, the high yield market is a bit optimistic. Default rates are low, recovery rates are high. So it's a bit rosy scenario which is priced into the market. So you should be a bit cautious here.
Okay, that's not the case in Europe, though.
No, in Europe, obviously, we don't have the composition like we have in the US. Quality in Europe is higher. And of course, the high yield market will benefit indirectly from the QA efforts by the European Central Bank. So I would say the European high yield market is slightly more attractive than in the US. Still, you could say in both markets yields are below reasonable levels. They are a bit expensive. But as the hunt for yield will continue for the shorter term, that isn't really a worry.
Okay. Now, the oil price isn't going to drop forever, is it? What are your views on what's going to happen next year?
Well, I think most likely oil price will stabilize around these levels, because we will have some cutback in supply because it's not longer economically viable. For the rest, the world economy will strengthen, especially China. We expect that Chinese growth target for next year will be around 7%. And China is a bit weak at the moment. In general, for supply and demand factors, stabilization on this level is most likely. And I think also that if the oil price would drop below $75 for Brent, then you would get problems in the shale business. So then their supply would be cut. So I think stabilization around these levels, perhaps a bit of a rise, so around $90 a barrel is a reasonable scenario for Brent.
And the OPEC, is it going to have any weight on on the future?
Yeah, they will probably cut back production, and then we have to watch if discipline in the cartel is sufficient, of course, because some countries are, of course, very eager to export. Yeah, OPEC is now 1/3 of the oil production, so their position has clearly become weaker, but still an important force on the oil market. And perhaps the strengthening of the world economy will come to a rescue. The shale revolution, in any case, won't go away. So that will be around for years to come.
Well, Léon, thank you very much for joining us today.
Thank you.